Hey traders, Todd here with the Virtual Prop Trader or VPT Live Room Futures Recap for the week. We like to take a look at what went on during the week. We look at direction of the markets. This week was incredibly volatile. And all you have to do is take a look at a chart of the S&P 500, which I'm pulling up right now. This is the December 14 contract. And the S&P 500 had some significant directional moves. One of the things we look at in VPT Live Room every single day is average true range. Markets tend to trade inside of their typical ATR. So you'll note right here, since we made the highs right here, we've continued the increase. We did a projection right here looking for the S&P 500 to at least have initial tops at the 127 fib extension, and we called the 2010 area. So we bought puts right here on the SPY. We're able to profit here. Took them off a little before this big move took place, but still nice profits. Number two, as we pull back right here, I want you to note the increase in volatility. So down here on September 3rd, we were trading about 10 or 11 points a day in the S&P. From that time, we rallied, and right here we popped to 19 points a day. So an 80% increase in volatility with some significant high to low trading ranges. So right here, you'll note our average true range right here, gang, coming into this trade around 17 points. This particular day, the market moved from 92 to 70. So there's a 22-point move, 130% ATR. We projected the lows right here at the 1970s. Had a nice SPY buy on the calls, bought the futures for a beautiful swing trade, a pretty simple, low-risk, long entry. Then we rolled right over. We were looking for a potential head and shoulder stop, and with an ATR that settled that day at around 17 points, we were looking for a 20 to 21-point move. This guy opened at the highs, 1986 quarter, rolled all the way over just under 30 points. Not only did we make a lower low, we also had a lower close that closed in the bottom 10% of the bar. So I've got a projection right here for next week, S&P 1945s. We've popped up right here, and we want to take a look at just this most recent sell-off. So again, we'll do a quick fib retracement. I want to see the last swing high that preceded the decline to that new structure low. So you'll note right here that from the swing highs at 91.50 to these swing lows right there at 57.5, a 618 retracement, 1979, the 786, and previous swing highs of that big red candle, 1985. So we rallied right to the 79s by the close on Friday. We'll be looking to buy more puts and then also do a swing trade short right here on the S&P on a retest of this basically 80 to 85. Now what we'll do is we'll look at this market intraday to get the qualified signal. Stops will have to go above this 92 level. So as an example, if I sell 85 with stops at 94, I'm going to risk 9 S&P points, and the market will have to rally back above and close above that swing high after it's made this lower low, lower close. Number two, from any short entries at 85, just a retest of these lows at 62 pays 23. So that's a 1 to 2.5 risk-reward ratio. If we do happen to roll over, you'll note I've got a 127 extension of this leg showing confluence with the 1618 extension of that leg. So again, there's a 45.5 to 48, and that would be the extended target on any shorts. All right, so real quickly, after we saw these big moves in the S&P, we run what I call the level 2 trading strategies. We've got the cluster trader and the inverted cluster trader. So the cluster trader is designed to take advantage of directionless sideways markets. So if markets are in sideways channels, then we look to buy the bottom, sell the tops. So you'll see right here, this is a perfect example and a visual picture of a sideways trade. So with this, right here is where the cluster trader got long. This thing only trades for about 2 hours, 8 a.m. to 10 a.m. Central. It makes most of its money Tuesday, Wednesday, Thursday during the week. So from the long entries right here, we had a rally right here. We had a short entry right there. We rolled over, hit target 1, balance out on the trail stops here. So at this point in the day, we've had 2 trades. We're basically 1 and 1. We sell them right here. Market rolls back over. Now we're 2 and 1. We buy them right here. Market rallies. We're 3 and 1. We get a sell signal here. Rolls back over. We're 4 and 1. We buy structure support here and it rallies. We're 5 and 1. And then we get a sell signal right there, right before I shut it off at 10:05. And you see this guy right here. Now, during this trade real time, as the market rolled over, we took our profits here real time and then shut the system off for the day. Had we just let it run, this would have turned into a loss, 5 and 2 on the session. So you can see that during these sideways trades right here, we want to participate, and using our turning point black tip proprietary indicator, we are looking to sell tops, buy bottoms. So over the last 3 weeks, you can see right here, equity curve starting off with 0. We had a $1,000 drawdown, popped up here to 5,500, pulled back, and right now we closed that period out with about $4,500. You can see right here in the summary, the short trades have generated almost 100% of the profits. In fact, they have. And we got to pull about $2,000 out here for commission. So around $2,000 net trading a 2-lot over the last 3 weeks. We look for this thing to do 2 to 3 grand per 2-lot every month. That's the goal. Now, when the markets aren't sideways, they're trending. And this week we saw 2 big directional days. So the other side of this is the inverted trade. And this particular strategy does just the opposite. I employ DM positive negative here, 2 of the components of ADX, to determine directional moves. And instead of buying and selling tops and bottoms, this looks for a key point of support. And then if we're in a trend, we want to sell when that support is broken. So it's a momentum breakout strategy. And we pick up these types of moves right here when the cluster trader basically shuts off because this market's making new directional moves. Now, for the same period, this guy right here came in and did about 43% accuracy. 41.74, we got to take off $1,500, $10 a trade for commission. So running them on 2 different charts and in 2 different accounts net around 4 grand after commissions. So same market, same initial trading strategy, but one of them is momentum breakout based. The other one trades the counter trend. So great week in the Russell. Had some really nice swing trades as well. Be sure you click on the link, grab your chair, hop in with us, VPT Live. You can see this upcoming stuff. We start our pre-market analysis, show you the key price points where we can look for support zones, resistance zones, and high probability, low risk trades. Not only that, but we teach and train the entire time. We'll look to see you in VPT Live starting next week. Have a great weekend.